It with our global guest Peter Cardillo, who's also joining in. Peter, Dow is only extending its decline. This coming in after weak economic data. All the technology stocks are looking pretty nervous ahead of their earnings. And add to that, Donald Trump's comments that came in just a while ago, where he seems to be suggesting that perhaps we need to look at delaying the elections. What's going on?
Yes, indeed. These are the three factors that are pushing the market lower today. And, of course, the plunge in the second quarter GDP is an historic plunge. We didn't even see those numbers back in the 30s during the Depression. But I think the real fear here is not so much that number, because that's old news, and obviously it was due to the total shutdown of the economy. But the real fear here is that for the second week in a row, we saw unemployment claims rise by 1.43 million, and that's obviously a bad indication in terms of the jobs market, and certainly in terms of confidence and future spending. So, it's been it's a busy day in terms of earnings, and after the close, we'll be hearing from the four big tech companies, Apple, Amazon, Freeport, and Amazon. These companies obviously will be market movers, and of course we'll see what happens tomorrow. But as far as today is concerned, I think the fears of the election and, of course, the jobless claims are weighing on stocks this morning.
Of those comments coming in by Donald Trump, is it a reflection of too much nervousness ahead of the November elections, or the fact that Joe Biden is now leading the race to become the next U.S. president, or perhaps the fight against coronavirus, which is not ending? On the other hand, the tussle between U.S. and China only on the rise. How are you looking at those comments coming in by the U.S. president?
Yeah, well, obviously, we've been citing these problems for a while. Obviously, not the election tweet, but the geopolitical problems with China, the fact that we have high unemployment, and that's probably going to continue, and that's going to weigh on consumers' spending. This all, is negative news that I should say negative worries that will eventually impact this market. The only reason why this market has been climbing and has been basically ignoring the coronavirus, the geopolitical problems, and the high level of unemployment is because we have a generous Fed. And when you have zero interest rates, the only game in town is the equity markets, and we're seeing that, and we have seen that. And in fact, yesterday, the Fed certainly didn't come out with any surprises. They're going to continue to print money. They're going to continue to try to support the economy. The only surprise was that they indicated that the path of the economy depends solely on the course of the virus. And so with the uptick in new virus cases, this is adding to this long list of worries. And so, the market could be headed here for some sort of a short-term pullback. But again, we have to remember that the near zero rate of return in interest rates is a big cushion for the market.